Welcome to HDFC Life presents live sessions partnered by ET Now, a series of discussion with leading names from the financial ecosystem to increase awareness and conversations around life insurance. I am Kavita Thapiyal. For many of us, receiving our first paycheck is an exciting and proud occasion. At that moment, we think of all the ways to spend and enjoy the money, and safe to say, life insurance is not even a thought for most. Now, many of us believe life insurance is for a particular segment, mainly the elderly and experienced, but however, there are strong arguments that suggest otherwise. Not only that, but life insurance at a young age brings with it a host of benefits for you and for your loved ones as well. And because of this, we present to you Bridge the Gap, an initiative to lead the movement of helping Indians bridge the gap to financial freedom on Insurance Awareness Day. Helping us understand the cruciality and benefits of thinking of life insurance at a young age, we are joined by a few guests. Let's welcome R.K. Venkataraman, Executive Vice President, Third Party Product Head, Equitas Small Finance Bank, Mr. Dilip K, Vidyarthy, Head, Bancassurance, AU Small Finance Bank, and Mr. Namit Rai, Head, Key Alliances, HDFC Life. All right, welcome all of you to this very important discussion on life insurance for young professionals. Talking about the concept of life insurance, we've seen it changing in a couple of years. You know, people now really consider having it as a risk protection plan or maybe something to cover their financial liabilities. But then to you, sir, I really want to understand what is the basic myth that young professionals especially have around buying life insurance or the right kind of life insurance.
Most of the people, the youngsters, they think that life insurance is a very complicated product and it is basically a product which is a lot of confusion prevailing there. But I think today the way to look at it is that most of the youngsters are becoming spenders in this country. Now the spending population significantly is growing, which becomes very critical for them to look at life insurance as a compulsory saving and protecting themselves. So when you start young on a life insurance product, what happens is your cost of insurance is very low, and then you tend to get the same cover at a lower cost. Today as a youngster, the person is supposed to, either he is a saver, he needs to be a saver, or if he is in a spending category, he needs to secure his whatever amount that he is going to be spending, he needs to have a proportionate cover, and your term covers predominantly takes care of that. A saver, today if you look at all these youngsters, they look at saving money, and then life insurance becomes a very lucrative non-traditional product, I would say, to look at from a long-term savings proposition. And there are very simple product, which actually gives them guaranteed returns in the life insurance. So youngsters who are looking at saving, one, they can look at a guaranteed product as a savings proposition. Second, market linked product which is available for them to get a market linked return as well. So when you look at life insurance, the way it is perceived, it is not as complex as it is perceived. A simple 3 product category like a simple term product, traditional product which takes care of guaranteed savings, and then you have a market linked product. So that way an youngster can actually, I would recommend that they go, because with more and more consumerism that is happening today, people need to drift towards a compulsory saving and protecting themselves for any future eventualities. So that way I think it is very important for a youngster today to go in for these kind of products.
Sure. Now, but it's very important to have a balanced view in your financial portfolio. When you start your financial planning, you've got to have the right kind of insurance. That's the first step towards having the right kind of financial portfolio and plan. How do you ensure your investments and insurance are separate? Because although there are a lot of products where in insurance where you can cover yourself, your family, and also have an avenue of investment, but then how do you strike out that right kind of balance? As sir also rightly explained, a lot of products in insurance also give you an opportunity to invest in the market, guaranteed plan as well. How do you define your portfolio keeping the right kind of insurance in mind?
It's a very good point. In fact, I'll build on what Venkat spoke about. He elaborated the different kinds of plans are there, and since you mentioned about what is the right kind of insurance and how do you balance between insurance and investment, the beauty about life insurance savings plans in particular is that they provide all kinds of customers the kind of product requirement that they have, whether you are a risk averse customer or you are open to taking more risk and you are wanting to have investment in the market, gives you everything alongside that. Life insurance products, you can take a product which gives you a guaranteed return, which provides you an income on a regular basis. You can customize it as per your requirement. In fact, in the last couple of years, there's a lot of advancement and introduction new products which has happened, and every single individual today has the option to customize a product matching her requirement.
Sure.
And it's an ideal mix. And if you ask me about how much amount of insurance a person should have, that basically talks about the simple thumb rule is that you should ensure that the lifestyle or the living standard of your family is not affected in case the main earning
That
member
is very important, you know, because what kind of products are available, that one can just check on one click across platforms. You have that information available. But what you just highlighted, I think, is there a formula to figure that out? What kind of cover is actually enough for you and for your family? How can you do that, Namit?
So there is a simple ballpark thumb is that whatever income is, take a multiple of that. Some people say 10 times, some people say 15 times. It's a way of, the way I would say is that if someone's income is very high, you should ideally look at the amount of money that you need to spend on an annual basis. That amount of money should be coming to your family. So if someone's earning is much higher than what you're spending, you need not replace the entire income, because that's a surplus that goes in through. So the life cover has to be built accordingly. And the second thing which you have to do is that look at a life cover which sustains till the dependence of your children. So after a certain age, your children will become independent. You expect them to become independent. So life cover should ideally cover your earning period, is what we propose to people. And that's how it has.
When we talk about life cover, and let me just talk about pure term plans. We are seeing a lot of variety in it as well. How can one decide what suits them? We've got a ballpark formula kind of a thing that Namit also gave, but then talking about a pure life cover and especially a term plan with so many choices these days, how do you know which is the right one for you?
So thanks, Kavita. The term plan is very simple. It's like having a motor insurance. You take a motor insurance because if anything happens, you get indemnity about the claims that you raise. Similarly, term insurance is completely how much income you are generating for yourself and your family. And accordingly, you have to look at that. In absence of you, how this plan can take care of your family, your income. So replacement of income is basically the term plan. Depends on age. So term plan is basically driven through the age, is dependent on age. Early you
and the liabilities that you have on you, you might want to cover that.
Yeah, so liability as well, but similarly is in your income you take care of liability as well. So basically term plan are dependent on your age. Why I am saying, because early the age, the lower the premium.
All right, Dilip, let's talk about the online business. You know, post-COVID, we've seen a good amount of awareness coming in as far as life insurance is concerned. What is the kind of trend that you are looking at in terms of buying policies online? Because see, it's very easy to have it just on one click.
So digitalization has changed the consumer behavior, and even the life insurance industry is ready to take care of that. And roughly around 93-94% Gen Z and millennials are generally research online before buying the policy. And even though buying behavior is very less online, but offline whoever buy, 48% people go online, research online and buy offline.
So buying behavior is less. You mean to say that they research online, but then they go and buy it physically from the branch or wherever the outfit is. Okay.
So
but what is actually not happening in buying behavior? What is the missing link?
Because still insurance is something that need an advice. Lot of offerings are there on place, whether it's investment or term or ULIP. That kind of suggestions they need, and there even the informations are there online, but still they need a support of a bank advisor or agents or any financial advisor to buy the policy.
Where are we doing well? Are we talking about tier 2, tier 3 towns as well? From as per the consumer behavior, we are getting a lot of inquiries, a lot of research work. Are these towns catching up, or are we still big only in the urban areas?
So it's a very interesting trend, and like in all the other financial products, you see tier 2 and tier 3 have become a major contributor to business for life insurance companies, and especially when we are partners. The thing is that today a customer in a tier 2 or tier 3 market is as aspirational as a tier 1 customer. They are as aware because of digital avenues, because they see everything on media. They are aware and they want to have the best of products, or the products which are offered to a financially aware customer, they want to have access to that. So that's where it is becoming. And for us as an insurance industry today, the composition of business that new business that we do from tier 2 and tier 3 is gradually increasing in the overall kitty of business that we do. So it's definitely we're seeing a shift, and that's where the sessions like these, they help us create awareness about how you can understand and the product better. And I'll just add to Dilip's point also. He didn't mention people inquire online, but still they prefer to go via distributor because there are so many new variants, options available for you to be able to customize a product for yourself, which will serve you for 15 years, 20 years, 25 years.
Right.
You don't want to get it wrong.
Right.
And that's where a person, a physical advisor, a person who is adept in the product, adept in the business, is always well suited to advise people on the right way.
Exactly. So when we talk about youngsters buying a life insurance or any product of life insurance, what are the things that they should be taking care of in terms of disclosing? And we discussed the right kind of coverage that they need to have. But because it's a long-term relationship, it's very important to be aligned with the requirement that the insurance product or the contract has. So how important it is for you to be transparent, because you're talking about youngsters, their lifestyle changes, their habits change. So what are your tips and tricks for them?
So somebody at the young age is entering into a life insurance product, irrespective of whichever market it is. His whole purpose, there is an objective. He is trying to secure his family. So which means the premium that he is paying, he needs to ensure that if there is an eventuality, his family gets the claim, for which he needs to disclose. And most of the time, people think that by disclosing that he is a smoker or consuming alcohol, if you deprive that information, the cost of premium would come down. But I think it's very important one discloses everything and pay the premium, so that in the claim when it comes, where you are not there but your family is going to get the claim.
Right.
So that becomes very important when it comes to any product pertaining to life insurance product.
All right, so that covers up the discussion part of this show, but then let's move on to our viewer queries.
Hi, I'm Sakshi from Amritsar. While my company provides me life insurance, since I'm the sole earning member of my family, मुझे मेरे colleague ने recommend किया 1 crore term life insurance. Do you think I should go for it? And अगर मैं वो use करती हूँ, so what factors should I look into?
Namit, would you like to answer this question?
It's a good question. In fact, a lot of people look at insurance as a product which, if the company is providing, maybe they do not need it. And it's a very good question that the viewer has asked. And I would advise that you should always have an insurance of your own. Now, the second part is about the amount, how much you need. That depends upon the kind of lifestyle that you want to give your family. You'll have to do the calculation based on what kind of monthly expenses do they have, annual expenses do they have, and God forbid, if something were to happen to you, then will they be able to continue with that lifestyle or not. As far as the company covers are concerned, it's a great support from the employers who provide a benefit for their employees, and it's a welcome benefit, but it never ever replaces the need for a personal life cover that you should take. You should look at a life. Pure term insurance is basically a product in which you should look at an organization which is going to be there for long term, in which you have the trust and the confidence that they will be around in that period, and they will be able to service you well at the time of, God forbid, if claim comes. So take a life cover for the right amount for the family's lifestyle and for the duration that you see you earning yourself.
Hi, my name is Varun from Bangalore, and I've recently graduated from college and started a startup with my friends. Now, while we're trying to grow this business, there's a lot of uncertainty that we face. So can life insurance help me create a backup plan?
Mr. Venkataraman, would you like to answer this question?
So firstly, congratulations for starting a company, and that's a very good initiative. But when you have started a company, a lot of important things that you need to keep in mind as far as financial stability is concerned. One most important aspect is business continuity. Now, as a startup, you need to ensure that your business, you're able to maintain continuity in the absence of you. That becomes very, very important. So life insurance comes as a very important investment product for you when it comes to business continuity. Now, I'm sure you would have taken a loan from banks as part of your startup initiative. So which means you need to ensure that your loan is also protected, and in the eventuality, you don't end up losing money there. So that becomes very important. Now, I'm sure as part of the deal, you would have had a buyer-seller agreement as well, which you would have done during your startup. So life insurance product actually can take care of that in the eventuality of any thing that is happening to the individual. You will be able to take care of the buyer-seller agreement requirements. Now, key man is very important. You as a startup person, you have a key man insurance, because you become the intellectual property for the company, and in the absence of you, the company may end up losing the intellectual requirement which would be deprived in the absence of you. So that becomes very important. Now, life insurance product also for your employees as an privilege, benefit. You can look at extending life insurance solutions to your employees, which will help them to actually, you can bind them to your company and make sure that they enjoy the benefits as far as product is concerned. And I think, it's very important, lastly, is the overall family is protected. I know when you do your overall estate planning kind of a thing for your family and everything, I think this product becomes very, very important. So I think as a startup, you need to make sure that you have adequate life cover which takes care of all aspects of the risk that is involved in a startup. And these life insurance, there are a good amount of products which are there which can take care of all these solutions.
Hi, my name is Unnati Das and I'm from Nagpur. So recently I have graduated and I'll be starting my job soon. So I needed your suggestion whether I should invest in life insurance in the future when I'll be having liabilities, or is it better to take a term plan now? What do you suggest?
Dilip, what will you suggest?
Great question. For term insurance, is right time to buy because age is crucial in terms of deciding the term insurance premium. And early the age, lower the premium. Secondly, you pay less in entire policy term because you have taken policy earlier. Third is that your family get cover early on. Any earning member, whether it's a sole earning or a individual
Every earning
earning,
member should be
has to, because we are the assets which giving an earning to our family. So that earning has to get replaced with the term plan, and earlier the age, the lower the premium.
All right, so with that, it's a wrap on the discussion today. Thank you so much for being on this show and helping our viewers with every step towards buying the right kind of life insurance. Thank you so much.
Thank you.
Thank you.
And to our viewers, to remember that it's never too early to think about securing the future of your loved ones. The sooner, the better. So reach out to a professional today and join us as we bridge the gap between you and your secure future. Thank you so much for watching. Goodbye.